You want to be greedy when others are fearful. You want to be fearful when others are greedy. It's that simple. And of course, the Oracle of Omaha himself, Mr. Warren Buffett, said this. This is widely regarded as the best investor of all time. And his bank account would certainly solidify that. That's a B next to his net worth, by the way, there. $136 billion. And so, I want to learn from this guy. I'm sure you all want to learn from Warren Buffett. There has to be truth because that is one of his core principles and has led to his incredible wealth he's created. But when I hear things like, I should be greedy, I don't know about you, but it makes me take a step back. And so when I read this quote, and I know him to be an incredibly generous man, he's given away a lot of his wealth, right? I'm trying to look and say, what does he really mean there? And so when I hear that you need to be greedy when others are fearful, what I think that it means, and what it means to me, is that you want to be ready to take action when others are fearful. You want to be able to take action when others are fearful. Because what happens in a time like this, where there's a lot of noise, it leads to a lot of fear. And what's the easiest thing to do when we are scared? It is to do nothing. That is like the human trend, right? We all are guilty of that, right, at certain periods of time. But after studying that and maybe doing that a little bit in my younger days as well, and I would imagine you all have gone through that same experience, you start to learn that inactivity has a real cost to it. It's called your opportunity cost, right? Who can explain to me what opportunity cost is? Who's brave here? Yes, my friends.
It's the cost of that foregone for what you're currently choosing.
Exactly. It's kind of like a hidden cost. We all are really aware of the cost of buying something that doesn't work out, but what cost was there for us not making a decision? And what Warren Buffett is talking a lot about is let's understand what that cost is, and let's be ready to take action when others are fearful, because you probably have the opportunity to get a good deal, right? So then this got me thinking, okay, when else in my 18 years of investing have I seen other times that we've been fearful? When else has there been a lot of noise in the system? And I started to invest in 2006, so guess what? There's a lot of opportunities for me to think about noise in the system. Has anybody been investing since 2006? Yes, Ray has. Yes, what's your name? Jarrell. All right, great. Thank you for being here, Jarrell. So when else have we had this noise? When has it caused us as real estate investors to sit on the sideline, and how much does that cost us? What's the opportunity cost of that? All right, so I started to go back in time. And one of the things I found, by the way, if you ever want to go and kind of look back in time, Google offers this thing where you can go back and look up headlines for a certain day or a certain week. It's amazing, right? And it really helps for topics like this when I'm trying to go back in time and see what we were thinking and what we were feeling. So as I went back in the annals of Google, I looked back at certain periods of time and I said, when else have we been fearful? When else has there been headlines? When has there been a lot of noise? And it didn't take me too long to go back. It was like 8 months ago to find a great headline here. Fox Business, right? Real estate investor, one of our own kind, warns the U.S. is entering the greatest correction of his lifetime. And he warns that
epic levels.
It will be at epic levels. Right? Well, let's see what the opportunity cost has been for not taking action and buying into the fear there. Because all that's happened since that proclamation of an epic correction has been that home prices have gone up $11,000 in Jacksonville since. That's 3% home price appreciation in the Jacksonville market. Doesn't really sound like a correction to me. How about you, Pops?
No, it doesn't. But what about
epic?
Greg, December 27, 2022, when Newsweek said, is the housing market following same patterns as 2008 crash? What about then?
Well, I'm glad you asked, Pablo. So let's go back one more year and let's see what has happened since that headline hit the news. Home prices, of course, have gone up $28,000 in Jacksonville since. That is a cool 8.5% home price appreciation. That's $28,000 of opportunity cost right there from buying into the fear and the noise, okay?
Yeah, but Greg, Robert Kiyosaki, who wrote Rich Dad Poor Dad, said that he expected a market crash and an economic crisis in December 10, 2021. What happened then?
So 1 year earlier, right there, Robert Kiyosaki, which, by the way, if I had longer to tell my story, I would talk so much about how Robert Kiyosaki changed my life by reading that book, Rich Dad, Poor Dad. He absolutely changed my life. I have a special place in my heart for Robert Kiyosaki. But he, like a lot of other folks, proclaimed that there was going to be an epic correction and an epic, I can't remember the terminology he used.
Well, it's pretty easy to figure out.
Yeah, but it was bad.
Crash
right?
and crisis.
Crash and crisis. So home values went up a ton since then, $42,000 since then, and the greatest correction and crisis of all time, according to many folks out there. The drum doesn't stop there. Let's go back to 2020. And, March 17, 2020 was a really tough time for all of us. Okay, so I'm going to kind of just pause here for a second and just realize that we were all scared March 17th of 2020. And I think there was a lot of reason to be scared because the whole world was flipped upside down. But let's look at what the opportunity cost was, because at some point we could get over that fear and then we could have taken action, right? Jack's home prices have been up $123,000 since then. That's 51% home price appreciation until that time. So I get it why we were sitting on the sidelines for a brief period of time in 2020. I really do. But guess what? That's not the only time that talking heads out there proclaimed that there was going to be an epic correction. Because if you go back to 2018, September 24th of 2018, Realtor.com, I love this headline. 2018, by the way, this is pre-pandemic. Housing slowdown, softening, whatever you call it, it's real and it's here. I don't know if they understand the definition of real and here, because since then, home prices have gone up $141,000 in Jacksonville. That's an increase of 63%, right? Opportunity cost actually isn't just the $141,000 that we as investors missed out on. It's also the additional cost that you would have to spend to get into that asset now. So it could be as much as twice as that is your real opportunity cost. But guess what? It wasn't only 2018, because if you go back to 2015, CNBC put a headline out here today and it said, "Housing today, a bubble larger than 2006. And since then, it's gone up a bajillion, okay? So what I'm trying to show you is that there is a convenient narrative out there that real estate is heading towards the next crash. It's a convenient narrative. I'm not saying that we'll never have another crash. I'm just showing you here that it is a convenient narrative. So what we have to do is look deeper than the headlines, deeper than the narrative. And what I can offer all of you today is an approach based on data and perspective, not fear, because fear leads to inactivity, which leads to opportunity cost. Data with perspective will give you confidence to make the right decision for yourself. Because times like this, just like Warren Buffett was saying, these are times where people get ahead financially. You do things that are different than what the crowd may be saying to do. And that's really where you start to take a giant step forward.
Can I borrow the mic?
You may.
I'm really enjoying this because he's not this animated when we're doing this in the studio. Like the whole sound effect thing, that's new.
That was pretty good, huh?
Yeah, that was pretty good. That was pretty good. Just a quick couple of stories to transition here into what's currently going on and talking about these fears. Number one, that March 17th thing, 2020, we were in our third month of doing the show. My whole career hinged on delivering to this dude. And I was freaking out about it all, right? And we went live on the show, and he's just like, everybody's talking about the market going down. I'm not so sure about this. I think, Greg, at that point, you were probably the only dude that weekend, that Tuesday after the NBA canceled their season, that came on and said, the way that we see it, inventory is still way short in Jacksonville. So, I don't know where it's going to be in a month or whatever, but this stuff is not going down because of a stat that we kind of now made famous on the show called MOI, months of inventory. So this has been practiced, right? This idea of they've been around the block, they know the metrics that they're looking at, and they have the gumption to say it publicly. I think that was really the first moment that it happened. And now you see him, right? He's borderline too cocky about it. But it's really been this growing process of just buying into it, because he's the most humble guy ever, right? He's super uncomfortable. I just call him cocky. So I've been living this, and it brings me back to this whole election cycle that we're in. And I think about, this is my first time actually buying real estate was end of 2020 with these guys. But the first time I actually put money into real estate was a private loan that I actually made to JWB, thanks to a common friend of mine. Y'all know Whitney Ritchie? Yeah, one of my best friends. When I still lived in Miami, and once that loan came due, it was 2014. There was an election happening. I'm just like, I don't know what I'm going to do with this money. I'm going to wait till after the election, and I never re-upped. And if you want to talk about opportunity cost for me on that, what's 10%? I don't know. You're the numbers guy. What's 10% compounding on $25,000 since 2014?
A bajillion.
It's a ton. It's a ton, right? And I didn't spend that money on anything good. Right? I didn't buy more real estate at that point. I just kind of stuck with it and did my same thing. So it brought us to this idea of there's an election coming. Are people still thinking this stuff? Let's talk about it. So let's talk about it, G.
Let's do it. So let's break down these common fears, right? There's this common fear that in election years, real estate tends to kind of lock up. And if we think about why people think that, it kind of makes sense, right? In election years, people, our leadership may potentially be changing in our country. We don't know the strategies and the ideologies, and we kind of create this thing that, oh man, if that's happening, and I need to make big decisions, maybe I just push that decision off. And buying a piece of real estate is a big decision for people. So you start to connect the dots in your head, and you're like, well, that must mean that real estate just stops buying and selling during election years. And if things just stop being sold and sales stop happening, then real estate values must go down, right? I don't know if anybody's actually thought through what people are thinking during election years, but that's the only thing that makes sense to me, right? But the data here just is completely contrarian to that train of thought when it comes to real estate. And the reason is because people need a roof over their head. People need a roof over their head. Real estate is a critical need, right? People are constantly having babies and constantly growing up and forming households and moving to awesome cities like Jacksonville. But on a national level here, 7 out of the last presidential elections, real estate went up in value after that election. Okay, 7 out of 8. Can anybody guess the one time it didn't go up? What year did it not go up in an election year?
After 08?
2008. Glenn, why did it not go up in 2008?
Because there was a great financial crisis.
There was a great financial crisis. And what caused the great financial crisis? What industry caused the great financial crisis? Gregg Cohen, no. I can tell you, I didn't do that. I didn't do that. It was real estate, right? Real estate caused the Great Recession, and real estate bore the brunt of the Great Recession. But keep that in mind, because real estate hasn't caused other recessions. And when real estate doesn't cause a recession, real estate doesn't bear the brunt of the recession. Real estate values actually go up. So that's overall in the entire country. But just like Melissa was asked, let's start to break it down here in Jacksonville. So what I want to bring to you all is not just data plus perspective, but Jacksonville data plus perspective. Because what you all hopefully can kind of see is this isn't me just speaking this into existence. Since 2020, and I listed out, the opportunity cost there, JWB has bought thousands of properties since then, right? Thousands of properties. And the reason that we were confident and could overcome that fear is because we have data and perspective. So when we're attacking this idea that real estate goes down in election years, let's attack it with that same mentality of data plus perspective. In Jacksonville, the data is better to support that home values go up in election years. It's happened in 10 of the last 11 election years. And the appreciation rate is actually higher for those years than the normally high home price appreciation rate in Jacksonville. Normally, home prices in Jacksonville appreciate at a rate of 4.9% per year. In election years, not only have they gone up 10 out of the last 11 times, but they've gone up at a rate of 6.8% on average. How do we feel about that data? Right? Is that a little bit different than what we all may have been feeling coming into today? If you thought that that data was out there, go ahead and raise your hand. Right? You did. All right, Ray. There we go.
You're looking at these years and you're looking at periods of recession, coming out of recession. When you see the rates going up, 84, 85, 4.7, 2.5, 3.6, you're coming out of a recession. 2000, 2001, you're at the peak of coming out of recession. You had Iraq War, 9/11, you're coming out of that chaos, 18.1%. These are all coming out of recession periods.
I love that. I love that. Because when we're in a period of recession, what happens to interest rates? Actually, interest rates go down. They stimulate. We want to stimulate the economy. And when we drop interest rates, it stimulates the economy. And then what Ray is pointing out is when you're coming out of a recession and interest rates go down, you drop interest rates and real estate values tend to go up. It's a great nugget, Ray. Not many people think about what actually happens during recessions, but real estate values go up. So not only do they go up during election years, they go up in recessions as well.